As we close the books on 2023, I want to take a moment to reflect on how far we've come. We completed a comprehensive winter weather action plan, which has already been successfully tested in multiple winter weather events, including the extended nationwide winter storms we experienced this month. We also got fully staffed, restored our network, and reached full utilization of our fleet. Our network is in a healthy place, and it shows in our operational improvement. In fact, we improved in nearly every operational metric. We also made significant progress on our labor agreements, including ratification earlier this week of an agreement that secures industry-leading pay for our best-in-class pilots. We have now successfully reached ratification on 9 contracts in a little over a year, demonstrating our commitment to providing competitive market compensation packages for our people. We saw close-in performance strengthen in November and December for both leisure and corporate travel. This led fourth quarter 2023 to be yet another record at just over $6.8 billion in operating revenue. This demand strength, combined with about $1.5 billion in incremental year-over-year pre-tax profit from our network optimization efforts and the contributions from our portfolio of strategic initiatives, is driving us to expect additional revenue records and year-over-year operating margin expansion, despite cost pressures from new labor agreements and increased aircraft maintenance expense.
Overall, our unit costs, excluding special items, were down 16% year over year in the fourth quarter. The recently ratified pilot contract contributes the majority of the labor CASM-ex increase this year due to a step-up in wage rates, work rule changes, and enhanced benefits. We are steadfastly focused on regaining efficiencies to help counter some of the structural cost pressures as we look to control what's controllable. We are not satisfied with our current financial performance, and we will work relentlessly until we produce the financial strength and returns you should expect from Southwest Airlines. We now expect full year 2024 capacity to be up about 6% year over year. And our 2024 capacity plans do not currently include any MAX 7 flying. So, if certification of that aircraft continues to push out, our 2024 capacity plans will not be impacted. We expect to pay a modest $29 million in debt payments this year and continue to expect interest income to well exceed our expected interest expense of $249 million in 2024.
Our guide would imply first quarter 2024 nominal RASM to be about 5 points higher than our normal seasonal sequential average when compared with nominal fourth quarter of 2023 RASM.
Obviously, there's a lot going on, with Boeing. The MAX 8 is a great aircraft. We're very satisfied with it. And like Boeing, we support the work of the FAA and the oversight to improve quality, address any issues, because at the end of the day, a better Boeing is good for Southwest Airlines.
Certainly from a coach product, Southwest Airlines has the best coach product in the industry. I would just echo what I said on the premium component of this. It's highly cyclical, and I think that before we would take up that question, we would want to study that very closely as we think about that. I think that there's at least some evidence out there today that a demand for fares on the bottom end and lower products on the lower end of the segment, there may not be as much demand for those types of products today as what there once was.
As consumer demands and expectations change, and you've got different generations of flyers coming into the system as well, we will constantly look at that, understand what our customers want, and then if that warrants change, we will look at that and we will make the right decision. We did choose to restore capacity quickly, so our ramp up was greater than normal, and therefore we did have, you could see it, we had a drop in load factor. I think that's the biggest contributor in terms of the performance right there. That's different than normal. The SAV or the strike vote does not mean you are headed to a strike. There are many things that have to occur before you would get to that point. So I am not worried about a strike, despite the strike authorization vote. In fact, sentiment is fully recovered to, at this point, and our NPS scores, our customer satisfaction, have been records, and certainly back to pre-pandemic levels. We ramped up our hiring quickly to be able to restore the network and get all of our aircraft flying. That hiring peaked in October to November, and we have been decelerating that rapidly here in the last 60 days. One thing that's consistent here is we stick to our business. So we're focused on Southwest Airlines, improving Southwest Airlines, being the best carrier that we can be, improving our returns and profit margins, all the things we've talked about.
I think what the benefit for Southwest Airlines, Bob, is that we have a plan and we control our own destiny. We hit our plan, we get our returns where we need to be. We don't need something to break our way, a judge or anything else to rule anything. Our plan delivers our results.